Thanks, Sterling. Let's move the chat box out of the way. There we go. Very quickly, just sort of run through where we are at the moment, and really just does reinforce what is going on in the markets. There's a lot of congestion building. These are the currency indices. Top left is the yen, top right is the dollar. Down at the bottom here, we've got euro, and over on the right, we've got the pound. Pound's in congestion, euro in congestion. The yen is falling gently. No great momentum in it. You can see it over here. It's starting to come off. So in terms of risk sentiment, yeah, there might be a little bit of risk sentiment developing in to the indices. The dollar is just flip-flopping around, going nowhere at the moment. Here it is. It's all over the shop. There's no strong trend there either. And really, just to wrap up on a lot of the topics today is really around congestion. If we go to the currency futures, which are somewhere around here, there we go. Okay, this is on the currency futures. I've got the CSI over here. I've got the currency matrix. I've isolated this out on the dollar to give a perspective on the dollar, because currency futures are very much based against the dollar. So the 6A here is the Aussie dollar. We've got the cable, pound dollar here, top right. These are all on 5-minute. Down at the bottom here, we've got the Canadian dollar, and this is the CAD dollar, not the dollar CAD. So it's CAD dollar. The dollar comes second, CAD comes first. And finally, over here, I've got the 6E, which is the euro dollar. And they're all pretty much displaying the same sort of characteristics. And the point I wanted to make is this, that whilst congestion phases may not appeal as trading opportunities, they do have certain advantages. The one thing you have to have is patience. But if you have the patience and you're prepared to wait for these to develop, what they do give you are very, very, as I hope we've made the point earlier, very clear levels of what you're looking for in terms of the opportunities to jump in either to the long or short side. And those levels are generally very well defined. They certainly are here. We're trading around the fulcrum of the market, the volume point of control itself. Above, we've got this very strong level of resistance overhead. You can see how it's been tested. It's absolute pinpoint accuracy. The indicator is based on price. It looks at how often an area is tested, and then it paints it thicker every time that is tested and retested and holds. So this is a very strong level. We've got other levels down here. We've got little clusters here. We've got another cluster here. So these are strong levels. So if you're looking at this as an opportunity to the upside, there's two things. First of all, it defines the floor and the ceiling for you of that tunnel range, if you will. And secondly, once it does start to break away, provided it's associated with volume, where we move to the volume price analysis methodology, and you're looking at the whether it's a fake out or a true breakout. Once that's confirmed, then placement of your stop loss is pretty straightforward. A, because you've got a tight range, and B, because you've got all these levels to play with. So if you're breaking to the upside, do you put it below this level? Do you want to put it deeper? Do you want to put it deeper still, down to this level? But it's all there. It's very simple. There's no great, you don't have to do any huge analysis to figure out where, where to get in, and B, where to put your stop loss. This is the pound, this is cable. Again, exactly the same. We've got the volume point of control, a very strong level of platform support here with it. It's acting as support right now. You can see it. And we've got some resistance overhead. We've got some levels here, which are less important, but nevertheless, they are there and building. If it's retested and retested, it'll get ever stronger. And then once the market breaks, if it breaks to the upside, you're moving up into this high volume region of the histogram. It may struggle to get through that, so you want to see rising volume. On the breakout, you want to see a good strong candle with decent volume. And then where are you going to put stop loss? Well, you might put it under here if your risk and money management principles allow you. Set it in a deeper level. You set it down here, but it's all there for you. It's in a very contained range. It's very straightforward. There's no great thinking involved. Exactly the same here on CAD dollar. Not quite so clear, but certainly in terms of a break from here. And the key point about this one is if you were going to jump in here with a break above this level, which is a very strong cluster, yes, it's a good platform of support. But in terms of what's in the way of the trade developing further, you've got this very strong level up here. So in terms of jumping in there, I'd say it's probably not a great idea, because you're going to jump in. As soon as you jumped in, you're probably going to hit this level. So you're only talking a handful of points here, a handful of pips. So it's another facet of looking at the chart and deciding where you're going to jump in and what's in the way ahead of that particular trade. Finally, let's just a quick look at the euro. Exactly the same. Got a very nice ceiling building here at the top on the accumulation distribution again. That's pretty strong. That's been tested 5 times, so it's held. What's nice about this trade is that obviously you've got the trend monitor, it's telling you this is remaining bullish. We're pulling away from this volume here, which is falling away quite dramatically as we break through into 125, 20, 30 and beyond. So if the market breaks through there, you've got a very nice opportunity because you've got the volume which is falling away here on the histogram. So there's very little in the way of support and resistance, or certainly in this case resistance from a volume perspective, that is going to hinder progress higher. So all things being equal, if the dollar continues falling, that's going to be a decent trade. Then of course you go down to maybe a 10-minute or a 15-minute, do the same exercise because you want to see what's ahead. Have you got some strong levels of resistance ahead on that particular time frame? If you have, you might not want to jump in. But nevertheless, again, it's very clearly defined as where you might want to put your stop loss. You might put it under this little cluster here. If you want to go deeper, you might even go under here or even down to this level. It depends how much risk you want to put on the table and what you're looking for in terms of reward. And that's all it comes down to. And when the markets are in this sort of phase of price action, a lot of traders hate it. We don't. We're always searching out congestion phases because from congestion phases, trends develop. And all you have to do is be patient and wait for them to come to you. It's as simple as that. But you just have to be patient. And as human beings, it's generally not something we're terribly good at. Sorry, I had the chat box closed down. That's a good question. There are micro lots on currency futures for sure. Don't quote me on this, but I think they are about a quarter size, something like that. The primary contracts are $100,000, $125,000, so they are equivalent to a full lot. The micro lots, I think, are around, as I say, I think they're about a quarter size. I'd have to check, but you can certainly find them. Just head over to the CME site and you'll find them all there. The one word of caution I would give you if you're trading, this doesn't apply to index micro lots because they are very liquid and they trade with a very smooth price flow, and therefore you will have a nice chart to deal with. If you're trading any other micro lot, whether it's a currency micro lot or a gold micro lot, you will find them very spiky. You won't find smooth price action, and what you'll see is the chart will move to a price and it will pause, and then it'll move to another price. You might get a bit of a candle and then a pause and then a bit more of a candle. So it makes reading the chart difficult. That's not to say it's impossible, because you could have a full contract chart running alongside to give you the VPA analysis that you need, plus all the other stuff that you also need as well. But that's what I would caution you. Please be careful trading micro futures in those markets, and the same would apply to gold and some other micro contracts. They're very liquid. They are illiquid. They're not heavily traded. The difference with the index futures, the micro futures, they are very heavily traded, and they are very popular for the obvious reasons that it's attracted a whole new raft of people into that market who do not particularly want to trade full-size contracts, particularly big contracts, the ES, the NQ. They're more comfortable trading these micro lot contracts. There's lots of people in there, and it's a great way to start on index trading.
Sorry, you also answered currency,
in currency futures, everything's traded against the dollar.
It's still a pair.
It's the only difference is that in currency futures, when you in the spot market, you will have the dollar yen. In a currency future, you will have the yen dollar. So the value that you see is the inverse of what you see in the spot market, if that makes sense. So if you want to work out what the value is in the currency future, you just take the spot value and you take the reciprocal of it. In other words, you divide it by 1. Because everything in futures, in the currency futures world, is traded against the dollar. So the dollar CAD is not the dollar CAD in the futures market, is the CAD dollar. The dollar yen is not the dollar yen, it's yen dollar. So you'll see some curious numbers associated which you won't recognize, and that's the reason why. Hope that answers that one for you. There we go. And just a quick whiz round. This is where you'll find us. You'll find Anna here over at annacooling.com. That's where all the books are. They're all up on Amazon. They're in Kindle. They are in paperback. We have them in China. We have them in Taiwan. We have them in Japan. And we're just about to sign a deal in Vietnam for the VPA book, which is very nice. So yet another book out there. That's lovely. So they have been translated, and they are in those languages, both. Sorry, Don? And into Vietnamese, yeah. So we're very proud of that and delighted to be associated with those traditional publishers as well. This is the Forex program. It's called the Complete Forex Trading Program because that's exactly what it is. It has all the modules there. Psychology of trading is the one we always recommend you start with. I know some of the students are sort of, they want to get on with the indicators and all the rest of it, but that is the place to start, because if you understand yourself, you will find out what suits your trading persona, your strengths, your weaknesses. It's all covered there, and there's a whole section on, you take a test and so you understand all the aspects of psychology and what makes you tick, so you give yourself the best chance of success. The fundamental, the relational, where we look at all the related markets to understand how to determine what is going on in Forex, because Forex sits at the heart of everything. It is the kingpin around which all other markets rotate. It's as simple as that. And it's a fact that passes most traders by. And even those traders who have been doing this for many, many years do not seem to accept the fact that the Forex world is the one that sits at the heart of everything, purely because it is the gateway of money. And it's as simple as that. Technical analysis module, it's a deep dive into VPA and the mechanics of trading. And then there's over 200 hours of video in here, pulling it all together, how to use the indicators, loads of chart examples as you would expect, topic webinars. We teach reversal trading, trend trading, breakout trading, what tactics you're going to apply, how you're going to approach this market, what's going to suit you, webinar library, and a massive resources section. And it's all backed up with our VPA trading room, which Anna and I host every day. And it's full of traders who are helping one another, or either passing on their experience. And it's just a very friendly place. In terms of the indicators, they're all here. MT45, NinjaTrader 7.8, or TradingView. Currently working on TradeStation. We are getting there, I can assure you. TradeStation 9.5, which is the relationship between interactive brokers and TradeStation. It's a fantastic combination, because you've got a deep discount broker associated with a fantastic trading platform. And version 10, which is TradeStation Securities. We've got radar screen on both, which is great. Got some, the indicators work on in a fantastic way, the radar screen, so you can put them on there and you get a complete array of what's going on across the multiple time frames. It's just a brilliant way of presenting the data in a very compact form. Very, very powerful platform, great data feed. So we're really excited to get that one launched. Once we've done that, we're going to be dropping back onto TradingView. And pulling the rest of the indicators across on there, because we've now got object drawing and line drawing available. So we've got the facilities, which we didn't have before, to really get those other indicators ported across. So hopefully we'll get the currency matrix on there, the currency array, all the other good indicators as well, so that the packages will all be equivalent. Once we've done TradeStation, we're going to be moving on to multi-charts. And then once we've done multi-charts, we'll be moving on to another platform, building up the portfolio. And remember, whatever you invest in with us, whether it's one indicator or full package, you've always got the option to port to another platform. There's no cost involved. We just do it for you. So if you're on MT45 and you want to move to NinjaTrader, and they're all pretty much equivalent, the indicators anyway, there's one or two minor differences, but we always work it out for you anyway. You can port them across at no cost. We do it for you. It's just our way of saying thank you. And the same applies if you buy the full package. You get all the future indicators we develop free of charge as well. No one else does that. We do, because we like to look after our customers as best we can, and that's just one way we do it. And they're all backed up by 24/7 support and all the upgrades, updates to the indicators. You never pay us another penny. That's it. It's all done and dusted. There we are. I hope you've enjoyed it. I hope you've enjoyed today. We will be back on Tuesday morning, 7:45 UK time, for the London Forex session. Enjoy the rest of the trading day. Looks as though you're going to have to be patient today. Maybe tomorrow will be a big money day. You never know. If it is, jump in there and fill your boots. That's it. We're done, and we will see you again soon. Thanks so much for coming along today. We enjoyed doing it. We hope you've enjoyed it, and we will see you again soon next week. Have a great weekend. See you next week.